Hey, you guys, it's Jennifer Reynolds. We are going to talk about payroll taxes today. So, in this chapter of our financial accounting textbook, we are covering current liabilities. And so, what do payroll taxes have to do with current liabilities? Well, if the company still owes them to the government, it's a liability, an amount owed, right? And it's almost always current because with payroll taxes, the government doesn't say, oh, just wait till after a year or so and you can catch up with us. No, they're usually like, ooh, pay me weekly or bi-weekly or maybe monthly, depends on the size of your company and the payroll. Then there are other taxes that are payroll taxes that the employee is responsible for paying. And so dig out your own paycheck, your paycheck stub. I know they're all online now, but follow this along as you learn this in your chapter because it's something you should be really aware of yourself. And it'll also help you make it make more sense in here. So I've got up on the board standard abbreviations that you might see on your own paycheck or in this chapter or whatever. If you see ER, that stands for employer, and if you see EE, that stands for employee. So I'm going to start with federal income taxes. This is generally when people think of tax, what they think of, but there's lots of different kinds of taxes. But the federal income tax means a tax on your income that you earn, and it goes to our federal government. Do you know who is responsible for paying that? The employee is responsible for paying it. So we see it abbreviated FIT, federal income taxes, but there's kind of a catch here. It does come out of the employee's check. In fact, if you're looking at your paycheck right now, you probably see, oh, your gross wages were this amount, but they got reduced by federal income taxes. Where did it go? Well, companies are responsible for withholding it. So, in fact, on your paycheck, it probably says federal income tax withholding. So, a company may hand you $100 and then go, oh, but I've got to snatch back 10 of your dollars. I'm withholding it. And the company is responsible for turning that over to the government. So careful when you're reading test questions related to this. Whose responsibility is it to actually pay the tax? Where does it come from? It comes from the employee. But there is a law that says companies are legally responsible for withholding that and sending it in. The employee, me at UT Tyler, I can't tell my payroll department, oh, y'all don't worry about taking that from my paycheck. I'll just run by the IRS office and pay it when I get time. No, UT Tyler has to withhold that money from me. Okay, what about state income taxes, SIT? Same exact situation. It's the responsibility of the employee, but the employer has to withhold it and turn it over to the government. So, how much is Texas's state income tax? We're one of the few states that does not have an income tax. We all pay federal income taxes, and there's not one certain percentage. Again, this is not a tax class, so you don't have to memorize the percentages, but it goes anywhere from 10 to 37%. The more income you make, the larger of a percentage you pay in taxes. But state income taxes are determined by each individual state, and Texas is one of the few that doesn't have it. So when you're weighing those job opportunities after college and you might want to move to another state, you've got to weigh more things other than just, oh, the weather or my family's closer over here. You need to look at, well, if I'm getting paid the same in Texas and in California, what is my net check? The part that goes into my pocket, is that going to be affected? And for state income taxes, yeah, California has one, and there are even some some local income taxes, whereas Texas doesn't. That's something to consider. Okay, so what about let's do unemployment taxes next. So I'm going to write the abbreviations SUTA and FUTA. And I always say, remember it by this U. The U stands for unemployment. So you've heard of people losing their job and being on unemployment. They get a check from the government, right? Where does that money come from? I know the government actually prints money, but the money's got to come from somewhere. It always comes from taxes of some sort. So if you know someone that's gotten an unemployment check, rather than just the government handed it to you, here's where it originated. Companies have to pay into an account unemployment taxes on their employees so that if they let an employee go and that employee needs to go file for unemployment, it comes from that fund. So there's no one specific rate here. If you're a company like in Tyler, we have Ingersoll Rand or Train, they make air conditioners. They hire a lot of seasonal help and then they make a bunch of air conditioners and then they lay them off. and they'll hire them again next year, and then they lay them off. They're likely to have a higher unemployment rate than, say, like a small boutique business that's had the same two employees for the last 10 years that never needed to claim unemployment, right? Um, Whole other class, but this is also where HR and management comes into play here, because if you fire an employee for stealing from you, the first place they stop sometimes is the unemployment office. Oh, okay, I got fired for stealing. I'll just claim an unemployment check. Should the employer care about that? Yeah, because it's going to make their unemployment rate go up. And so the employer can contest that and say, look, if they hadn't stolen from me, they would still have a job. So I shouldn't have to pay unemployment benefits on that. And then you get into HR. Okay, how do we document this and make sure I don't have to pay for that person who is stealing from me to sit at home on the couch? These unemployment wages are meant for employees who lost their job by no fault of their own. But they're the responsibility of just the employer, not the employee, okay? So next up, we have Social Security. Who do you know, and I don't mean personally, but if you think of one person who might get a Social Security check, who would you say? Usually I have students go, oh, my grandma or a grandma, right? That's right. There's more to it than that. But ultimately, the big general answer is this is intended for people who are over 65 as a supplement, not as their only retirement. It was never meant to be, this should be the only money you have coming in because it's just not enough to live on, but as a supplement to what they've saved for their retirement. Whose responsibility is it? Somebody's got to pay Social Security taxes in order for that money to be there when we retire. Who does that? Well, notice I wrote this in both places. The employee and the employer pay that. In what amounts? Equal amounts. I never make you memorize percentages in this class, but just for funsies, so that you guys kind of know and can look on your paycheck and see, the employer would put in 6.2%, the employee would put in 6.2%. So matching amounts. I do want you guys to know equal amounts. And then there's something called Medicare. I'll abbreviate that as well. And notice I'm writing Medicare on both sides. And you don't need to memorize these percentages, but it's 1.45% each. So look, both the employee and the employer contribute 7.65%. If you've got a $100 gross paycheck, not only does some of that paycheck get reduced by your federal income taxes, state income taxes, if you live in other states, but also $7.65 out of every $100 you earned goes into this account with the government to hopefully be there later for your Social Security and Medicare. Medicare is basically healthcare insurance, again, for over 65. All kinds of exceptions and other things, but just so you guys have ever heard of that before, those are your general answers. So I think what makes some of these payroll taxes confusing to people, students like you when you're first learning it, is it's the first time you might have heard of all these specific things before. So you do need to spend some time reading and learning these. And I want you to know that Social Security and Medicare together are referred to as FICA taxes. So again, I hope you took the 3 seconds it takes to bring up your paycheck stub online and look at your paycheck, and you will probably see federal income taxes and these FICA taxes being taken out of your paycheck. What you will read about in this chapter of the book is that for federal income taxes, you can earn, be Jeff Bezos and Elon Musk and earn billions and billions of dollars, and all of it is subject to taxes. But when we get down to the Social Security tax, the government puts a cap on it. And this cap changes and actually keeps getting raised every year. And it's somewhere around $170,000 right now. What does that mean, a cap on it? It means the first 170,000. Again, you don't need to remember all these amounts. I'll give you the amounts and percentages on a test. But first 170 grand you earn, you pay Social Security taxes on. And then if you keep on earning and say you made $1 million this year, the rest of it you don't have to pay Social Security taxes on. But that's the only one of these with a cap. Medicare, you're paying on that. Say you earn $10 million this year, all 10 million you got to pay Medicare taxes on. Okay. So one more thing we cover in this chapter, and then I'll get to a problem where we'll work. Okay, what does this look like from the employee versus the employer side? Are fringe benefits. So Fringe benefits can be things like health insurance. That's what I'm going to use just because it's very, very common. And this can be on the employee or the employer side. For purposes of this class, got a lot of restrictions and limitations and rules later on, but for purposes of this class, this is totally up to the company. The company can say, hey, employee, if you work for us, I'm going to pay for all your health care. That's what UT Tyler does. Last year, they paid something like $16,000 on my behalf. I did not have to pull that out of my pocket for mine and my daughter's health care. My husband's got his own plan with his company. Um, or some companies say, hey, Jennifer, you contribute $500 a month and we'll contribute $500 a month if the plan's $1,000 a month or whatever. So this one just depends. So I'm going to say fringe benefits. And then another thing I want you to have heard of that this chapter talks about is retirement benefits. So again, especially once you get college educated and go look for that good job, you're not just looking for salary, you're looking for these fringe benefits. I don't want to have to pay $16,000 for my health insurance. So I love that UT Tyler pays that. That really matters when I'm comparing it with other jobs. Same for retirement. I need to save for my retirement. I understand that, but most professional jobs will help chip in towards your retirement. So at UT Tyler, they say, hey, Jennifer, if you'll chip in 6% of your salary towards retirement, we will chip in 8%. Man, that's free money. Of course, I'll throw in the 6% because if I don't, UT Tyler's not giving me the 8%. It's a lot of money. So those you're just going to have to read the problem for to see whose responsibility it is. Again, I'm going to work a problem with this both ways, but keep all of this in the context of, oh yeah, this is the current liabilities chapter. So regardless of who has to pay for it, if there's a rule that says the company has to withhold this amount, and there are rules that say that from the employer, then once the company has that in their hands, it becomes a current liability because that money doesn't belong to the company, it belongs to the IRS or the Social Security Administration or whomever, right? Along with these things that the employer has to pay. Those are current liabilities until they turn it over to the government. So your first step in this chapter, though, is to get all of this straight and figure out who owes what taxes. And frankly, you need to do that for your own personal good so that you know your paycheck is correct. I'm old, y'all, and every place I have ever worked has messed up my paycheck at least once. UT Tyler has messed it up 3 times. It just happens. They're not doing it on purpose. It's human error, or we input something wrong on the computer and it spit out the paycheck the wrong way. And if I'm not looking at it to figure it out, I would never know, right? So make sure you're looking at yours to figure it out. All right, let's work a problem now.